Ladies and gentlemen of the crypto space, it's a Friday, July 25th at 11:31 a.m. and I don't have a screen up right now because this image is so damn cool. And that is a line of stones. You got that backdrop and that captain. Oh, that captain. This is a great one. And that's a demarcation line. Demarcation is a line in the sand. It's a boundary between something and something. And That's really where we're at. And we're going to look at the data today. The data is going to tell us exactly where the demarcation line is and how long we've been waiting for it. And it's going to tell us so much about how we should think, how we should feel, and how we should view what's going on, generally speaking. That's a chart. I rarely draw on charts like this, but I put up two charts for you, a comparison, the move indicator as well as the DXY. This actually highlights some decent confluence. I should give you a little bit of a backdrop to the way I think. So the confluence is dollar down, collateral volatility down. Those the strongest bullish condition we could have in financial markets. And that's because of the mechanics of markets, whether it's just traditional financial markets, dollar and global collateral based, or crypto markets where you have Ethereum, Bitcoin, and anything else you could use as collateral on an Aave or a smaller money market. Um, it's the same thing. There's no difference between crypto and traditional finance in that regard. You got currency units and you got collateral. That's the way financials work. So, you know, a lot of our content is repetitive, and folks really need reminders of why we talk about the things the way we do. Why are we looking for the dollar down? Why are we looking for collateral volatility down? And I put up this pretty chart. I might as well try and get through this regurgitation of repetitive information as fast as I can. But it's an important topic because this is why and people should feel a certain way. This is why there should be 40,000 people on the stream instead of 40, because we're right here and we've waited years to be where? Right here. It's literally years in the making to get to where you are right now. This pretty, oh, not full screen. No, I wanted to show tiny so you could see the pretty background. Captain watching the demarcation line. Okay, so look, so collateral volatility. Unless I learned a good part of macroeconomics vis-a-vis crypto economics because it's not like I was going to a bank and posting 10-year bonds to borrow. Some folks have experience with a mortgage and you post the house that you're about to buy as collateral for the debt you're about to borrow. That's fascinating, isn't it? So if you go on Aave, you got to deposit some collateral. Aave, WBT, Aave. Actually, I think you can post Aave, but that's besides the point. WBTC, ETH, so on and so forth, and you can borrow dollar units of account. USDC, USDT, Go, what have you. So when the volatility is low, which is this bottom chart here, and not all these advertising pop-ups because I won't pay them anymore. Um, you see a correlation between collateral market volatility down and the relative value of the dollar strongly down. Now, obviously, there's a lot of components of the dollar because the dollar is relative to every currency out there. And there's how many currencies are there? How many global currencies are there? How many currencies are there right now? 180 currencies right now. So the dollar relative to each of those 180 currencies is going to vary over time in a chart form, up and down, based on trade balance and so on and so forth. Frankly, trade deficit. It's a big component of it, as well as now this brings up concept of carry trades and interest rate arbitrage, so on and so forth. There's a big world out there, and frankly, that's called the forex markets. That's big stuff. Okay, so collateral volatility collapses, as you can see in the bottom chart. Bup, 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 bup. Let me draw so you guys could play along at home. Oh, look, it's going down. Oh, look, it's going down. So you can see the correlation. Check it out. Look, down. You see the correlation? Down. You see the correlation? So when the collateral market volatility collapses, so does relative dollar valuations. There's a couple of mechanics in play, but I don't think it's just organic. I think it's also artificial. I think when the collateral volatility is high, they know liquidity is low, which means they need to increase supply of currency in order to quell the volatility. But once you start to increase supply and suppress volatility, you increase the capacity for the system to inherently expand supply. So the system itself has created most of the dollars in existence since the euro dollar market that most people don't understand. It is neither a market nor in Europe specifically. I guess it started in Europe historically. So if you go on Aave and your Bitcoin is $100,000 for 6 months on end, you could borrow more and you'd probably be comfortable with a 1.2, 1.5, what have you health factor. If Bitcoin is 50,000, 150,000, 100,000, you have high volatility and you're likely not going to be borrowing much because you have no idea what the hell is going to happen tomorrow and you don't want to be caught offsides with a one as a health factor. Low volatility increases the capacity for the system to use collateral to borrow. And when you understand double entry accounting, you realize borrowing is ultimately creating dollar units of account as per the mechanisms created by the Eurodollar market, which a dollar liability is functional as a dollar. In fact, when you think of currency, dollar liabilities are the dollar. So I don't know. So what's the relationship between a physical dollar and a bank deposit? I mean, obviously there's a difference. One's actually physical and one doesn't really exist, but they're functionally equivalent. You can actually buy something with a dollar liability and have no dollars, actual dollars. Then again, the physical paper dollar is still a liability of the Federal Reserve. So it's still a liability in paper form. A note representative of a Fed's liability. That's the way the Fed works as well. The Fed, I don't know the full mechanics, but I could try and state them as clear as I understand them. It comes back to like gold and gold certificates and getting assets on the balance sheet of the Fed. And, it's like, what was it? The banks that hold the gold could issue gold certificates or the treasury, something like that. And where the Treasury issues the certificates and then gives those certificates to the Fed, and the Fed could issue liabilities against them. I don't know that this is like the foundation of how the double entry accounting at the government level gets started, and how ultimately we have dollar paper currency units that are liabilities of the Federal Reserve. The Fed has assets on its books, and it prints the dollar liabilities into existence. Isn't it fascinating that the Treasury is the one that prints the paper dollars, but the paper dollars are liabilities of the Federal Reserve? This whole fucking system is disgusting. Gross. But it is what it is. So obviously there used to be treasury notes, not anymore. That's like pre and post 1971 and stuff like that. Okay. So there's your 2016 and 2020 bull markets in the crypto space, obviously circled. I don't think anyone can miss that. There's your bull markets. Yay. That's what your bull market. I mean, unless you're living under a rock and haven't heard anyone's commentary in social media, there was a bull market, a quote unquote the bull market that occurred in 16 and 17 and 20 and 21. And now we got some stuff going on in 2024, 2025, bleeding into 2026 ish. I don't think for instance, like 2026 would be like the 2019, 16, 17, 18, I don't know. That nothing is going to be exactly the way it was. I expect things clearly to be different. I don't expect 2026 to be like 2019. Um, Shit, it's a different world 2019 compared to 2026, and that's from personal experience such a statement is made. Okay, so we have the start of our downward leg in our most recent correlation between collateral volatility collapse and relative dollar depreciation. So if you draw like a vertical line, I guess, oh, there's your vertical line. Yeah, the top was really in October of 22. And then you had obviously a blow off a wick in March of 23. So that's a quarter away, give or take. Um, give or take. It's kind of 2 quarters November. But clearly, that's the candle body close was much lower, so they really suppressed that volatility, which prevented the dollar spike. Isn't that fascinating? If you're putting this chart side by side or overlaying them, you see the volatility spike in March of 23, but they were to suppress the volatility to such a degree that they didn't cause like a subsequent blow off top in the dollar. Because when you get that volatility, people don't know whether their health factor is okay tomorrow, so they tend to repay debt. And that when you're repaying debt, you're buying dollars. So that drives the price of the dollar sky high. And that's literally exactly what happened at the top in October of 22. Volatility up, buying dollars, buying dollars, buying dollars, until the finally capitulation and reversal. Whether the capitulation is artificial or organic or not, I think it's kind of irrelevant. I would say it's probably not organic. It's what I usually talk about with regard to geopolitical collusion, global geopolitical collusion. It's probably not organic. Okay, so this chart is nice, but we still don't really have that volatility collapse. Remarkable how let's clear the chart and go to just. Can I clear it? I just want the move indicator back. Give me my move indicator back. Oh no. Can I turn off drawings? Maybe I'll keep this stuff. I don't want this stuff. I want to clean this up. And I delete all drawings. All right, what a mess. What a mess. All right, now let's do it. Let's delete. Let's clean it up so I can talk about where we're at. Oh, nope, nope, that worked. I'm going to delete you, delete you, delete, 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 delete. I like my move indicator. Okay, now we go to regular. Yay! Now we're back in business. All right, I showed you guys this in social media the other day. Here's a rectangle, and here's some serious shit. Now, obviously, it's just broad strokes. But going back to April of 24, which is about a year and a quarter, we have interacted with this 8243 line at least twice. You get a little bit more granular. You see a little bit more activity. 1, 2, 3, 4, 5, 6. Some nice uh, volatility collapses into this price region. So what does this tell us from the weekly? I like the weekly because you got 100 SMA on it. What is an SMA from a volatility indicator standpoint? I don't know, but it is a moving average, no less. So you got a moving average in confluence with this particular level, and you do have your 200 SMA just below at about 80, 79, give or take. We have yet to meaningfully breach this 100 SMA to the downside. In how long? Last time we breached it directionally upward was January of 2022, years ago. I would say the interesting perspective to have is probably post GFC. What was it like back in 2012? Aside from the currency crisis, the Asian currency crisis, um, you know, if crypto was what it was now back then, That's where we are. We're about to punch this 82 line, which is a decent demarcation line between top side and downside. You got some nice rejections. Even this was a rejection in March of 2020. And ultimately, what this entire thing right here is going to prove to be is a giant rejection. Look at that, a giant rejection of the 82 line. It's kind of how I talk about the XY chart. So I like this concept of a demarcation line because everything ultimately above it gets invalidated. I mean, maybe this is a little bit balanced and skewed. Maybe what gets below it gets invalidated at some point, and that's kind of um, an end game for the dollar type of perspective, where the only reason this goes down is artificial management of the currency, Federal Reserve type concept, and they're managing things because the system is inherently structured where the dollar just goes up, up, and up. It doesn't stop. So how do you get it down? Artificial intervention, so on and so forth, geopolitical collusion. So, ladies and gentlemen, you've spent the last couple of years trying to figure things out, but to get to where? Right here, right now. Right here, right now. This is finally going to breach to the downside. Directionally speaking, I don't see any reason for it to revert to the upside in the short term. We've interacted with this level 3 times over the last year and a quarter, and directionality persists until capitulation. There is no capitulation here, but clearly we see meaningful dollar spikes, collateral volatility spikes. September of 24, big spike. March of 25, big spike. At some point, you get that big spike down. So, what do you think that big spike down does to the dollar, does to the relative price action of things like cryptocurrencies? That's when it gets weird. So we're right on the verge of weird. 97, we're under 98. Structurally, we're under the 100 SMA on the weekly. You're going to move down to 92 and the collateral volatility collapse into the 70s, upper 60s. Oh, that's where it gets weird. We're right on the verge of the weird zone. Right on the verge. Okay, you know what I talk about. Let's do crypto fintech because that's the macro. And we've talked about this a bunch, but I need to repeat these types of conversations because we have 115 people on the stream. There's 20,000 people that lurk or yeah, I don't know, whatever they do on X because I don't get 20,000 people interacting with me. And clearly, we don't have 20,000 people watching the stream. So I don't know what the hell they're doing on X. Maybe it's just like peeping Tom or something or just lurking. I don't know. I really don't know what people do on X. What are they doing? I could literally post a poll saying how many people see this poll, and it won't be 20,000 people. It'll probably be 50. I don't get it. I don't. Maybe all of X is just bots or NPCs. Oh, critical mass here, present. Much pleasure. Athletic concept. Hi, Cap. Good morning. Arrow. Hello. Killless in the house. Greg. Good morning, Cap. Love the power hour. Which is basically what it is. Arrow. Which do you think will be a stronger backer, liquidity injector, Coinbase, a consensus? Yeah, you don't need stronger. What you need is exposure. And in the end, the unexpected will occur. So at this point, yeah, I've heard folks saying that they'll concentrate from like EtherX into other things. And my 2 cents is, look, I'll just lock it. Whatever. It's okay. In the end, Coinbase will do what it's going to do, and Arrow is going to be more than enough exposure. So I really want the exposure to Linnea, so I'll take that EtherX drop, that Nile conversion, and I'll be content with that. It does great, great. It doesn't do great, great. It's just what it is. And I retain my sentiment with regard to like Clio and Mantle. I made my bed. Make your bed, and 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 it turns going to turn out the way it's going to turn out, and it turned out the way it was going to turn out, and that's basically worthless at this point. I mean, how many things? Some of that stuff we bought back on But like Geist, that went to zero. And there's other things on Phantom that went to zero. I've had plenty, food for thought, folks. I've had plenty of things that have gone to literal zero. Gotta own your shit, ladies and gentlemen. Make your bed. Or what's the phrase? It's, own it. This is meaningful stuff. You made a choice, and that's my 2 cents. And that's pertinent in the conversation of like, when do you sell a loser? And I don't know. Sometimes you don't. It may, only if it's maybe if it's a clear invalidation of a narrative and there's actually retained value. I mean, the only two examples of no, like I've never really sold a loser. Like Aura and Convex are clearly not losers in my opinion. I mean, Aura is clearly not even on anyone's radar right now. Convex is clearly not a loser, but I sold those because they didn't fit my narrative. Clearly, the narrative's still quite sound. Convex is doing quite well. Structurally, it looks really good actually. Well, there's 10, it's obviously newer than Curve, so you're on the weekly and you got the 10 SMA. Um, it's tremendously volatile. Look at that spike above the 10 SMA from a weekly perspective. That's massive volatility. It's 100% right there in the last 3 weeks, in the last month. Within the last month, it's 100% move. That's quite extraordinary. But that was a big retrace back in Q4 24. Curve 7% on the day. Anyhow, um, oh, I missed a couple of posts at the beginning. Fantron, Cap, could you post on Twitter to remind people to? Oh yeah, don't forget the 4-year lock on the Nile. My 2 cents is if you got Nile exposure, you might as well 4-year lock it to make sure you get the drop. EtherX. But that's the thing. It's not. I wanted to. I like to redefine what most people think is normal. So most people are like, oh, I have something that's depreciating. That's bad. No, it's not bad. It's part of the equation. And I think in terms of exposure, the exposure to Mantle vis-a-vis Clio did not work as I wanted. And it's expected by me for certain things not to work out. All I want is several, let's say you have 10 exposures, 10 positions. You bought 10 things. I expect not all 10 of them to work. I expect to only need few of them to really work to achieve what I want to achieve. That's the way I'm comfortable nowadays. And so I'm okay with buying things and it not working out. That's my sentiment. That's the way I engage. Listen, if I buy like 30 grand worth of Clio and it's worth like $1,500, what's the point? What if it reinflates? Okay, so I'll spend $1,500 to see if it reinflates. What's the point in selling it? So that's my sentiment. That's why you own things. And look at Nile. Nile was significantly depreciated, and then the whole consensus narrative picked up again. Okay, now it is significantly reappreciated to the point where it's like 2x my entry, which basically between Nile and Ramses, the appreciation accounts for the Clio exposure. So, all right, cool. So in all that time, I could have been, ooh, should I sell Clio? Or in hindsight, what occurred was Ramses appreciated, Nile appreciated, and the whole thing balanced out. And how much work did I do? Nothing. But the whole equation balanced out without having to do anything at all. Hope that helps. For their respective V33s, yeah, there's no way to know. Coinbase really is this retail narrative of folks that don't know how to engage with markets. They don't know how to invest. They're gamblers and speculators and quite often degenerate gamblers. and non-technically savvy, which is not necessarily a bad thing, but that's the Coinbase narrative. Consensus isn't really that. Consensus and Linnea, you got to do significant things in order to bridge. You got to understand the concept of like Stargate or what have you to get capital from one chain to another. And we're not at perfectly seamless cross-chain liquidity yet. And Linnea is not part of the optimistic super chain with like a velodrome super swaps. And what the hell is super swaps going to do? That's what I'm actually interested in. What is velodrome going to do with regard to base? It should be part of super swaps, right? Because base is an optimistic super chain. It is an optimism chain. So I don't know. That gets all a little bit murky, but I look forward to seeing how that plays out. But Linnea is not part of that equation. But Linnea has its advantages. I don't know. I choose to retain exposure to Linnea, for better or for worse. Plus, it works out better in accounting, in my accounting books, that is. Like Sonic Airdrop, not Sonic, Shadow. The books were great, and it still does very well. And the weekly claims are nice, and that's all I look forward to. I'm not an opportunist. Like you get airdropped, what we got airdrop, and where Shadow went. Oh, sell it high and buy it low. I'm not an opportunist. At some point in my life, I guess I was, but I've realized I don't want to be that person, and I just want to keep it simple and follow my rules. That shadow is locked in, and I think it's down from it's up from airdrop, off airdrop lows, significantly down from its all-time high, but it produces nicely weekly, and that's all that matters to me. And my expectation, I don't care about total net worth. I care about how much I get paid weekly and call it a day. And chart your weekly revenue. And as long as your weekly revenue is up year over year, in hindsight, you could say you made good decisions. I mean, the odds of it being up every year. So, obviously a chart goes up and down. So you could have a year that's down. But what matters is the trend line. So, you look back between like 2020 and 2030. And if you have a chart of 10 years of revenue, I wonder what that's going to look like. I only have data that goes back to 22 because that's when I started this mentality and accounting methodology. But I'm inclined to think between 22 and 30, I expect higher lows and higher highs with regard to year over year revenue, year over year, one candle per year. Okay, those are time frames I handle. Leandro, good morning, Cap. I know you like big time frame charts, so take a look at SPX denominated in gold, 12-month, 150 years of data, tells a story. Yeah, yeah, let's take a look. Well, there's the S&P and dollar denominated. Yeah, I like this chart too. Look at that. That's the weekly chart. That people think, oh, let's look at the weekly chart. No, no. Let's look at the yearly chart. Huh, it's not bad. Back from 1929. So here's some perspective for you folks. Denominated in gold, the S&P 500 is up close to where it's at. Denominated in gold, the S&P 500 is up 62% in 96 years. 96 years, it is up 62%. So clearly, it's just a stupid investment. And it's just bad. S&P 500, American companies. It's because you know what it is in hindsight? It's because people are in charge of share prices, and it's an optical illusion and monetary debasement. Listen, all that story to me is just noise at this point. Like the whole, it's real, like the whole Bitcoin narrative, debasing their currency. What does the Federal Reserve do? The Federal Reserve prevents deflation, meaning they cause inflation, which means the currency is worth less. Folks, show that chart of where the dollar has lost 99.5% of its value. Yeah, if the dollar didn't do that, and you saw the S&P crash 75% and there was 40% unemployment, that's what the Federal Reserve basically cures. But by curing that, it causes all this disparity. Rich get richer, poor get poorer, value of currency goes down, and optically, people have no idea what the fuck's going on, stealing your purchasing power, all that narrative. Yet, if you didn't have that, it was pretty disheartening what it's like with significantly high unemployment, significant reduction in currency in circulation, and collapse. You have a complete flush of the economic system, destruction of business, destruction of debt. It just, it's painful. It's painful both ways, except one way everyone sees it. The other way, only the poor see it and the working class. And it's really, it's where the wealthy get bailed out by debasing the currency. So that's what the Fed does in many regards. Listen, it's bad either way. Nobody was happy during the Great Depression, but you know what went up in value during the Great Depression? The dollar. When the stock market collapsed, the purchasing power of the dollar went up. But people tend to look back at the Great Depression and be like, "Ooh, we don't want to see that again." Yet, but that was when the value of the dollar went up. So people got their stories and they choose their biases. You know, most people would not be happy if the value of the dollar was going up because for the value of the dollar to go up, people can't afford to purchase things. And that's what drives that of stick buy. Hey, look, let's say Ford F-150s. They made 10,000 for the year. If they only sell 5,000 of them, and people can't afford them, at the end of the year, what do you think 5,000 cars they're gonna be selling them at? A cheaper price. Ooh, the purchasing power of your dollar just went up significantly. How? Most people couldn't afford them. So they had a shitload of excess inventory and they needed to drop the price. Well, purchasing power go up. So for the purchasing power to go up, people can't afford to buy things. You understand? So most people are so they pick on things. I'm not fond of that reality. How people find the narrative. They pick on the dollar, and clearly it's perverted and they're warranted. But it's just, I think people are off, and that's exactly people's intentions are misplaced, and that's why I have my methodology. Is my intention is to have a sustainable, repeatable methodology to engage in markets, and that's probably the most important thing to achieve success. But I guess everyone tries to find a different reason to stick to their methodology, like the concept of like Bitcoin would have worked pretty well 10 years. You bought Bitcoin in 2014, 2015 for 250 bucks. It's the beast. All right, fine. That narrative worked. I still like that narrative. I think it's better. The three rules. I think that's just a better narrative. It's my opinion. Anyhow, Sergio present, Bitcoin, good morning. Arrow, keeping both. Yep, yep, yep. Spirit swap. I think it's worthless. I like that stuff. Worthless. Touch upon Ramses. Yep. Ramses has done well. It's just not printing much nowadays, but whatever. But it's not. It's Arbitrum exposure. I like the exposure. Where's it at? Let's see where it's at. I b- I bought it at 1.8 cents. It's at 1.9 cents. So I've had all these rebases and any compounding I've done, which is a little bit. It's very nice. Okay, but that's not it's the net position value, which is worthless. It can't be sold unless you're selling your BENFT at a discount, which I don't like to do. I don't want to do that. Nobody rational really does that. Um, well, at least I mean, it's there's. I don't mean to call folks irrational for doing that. There is reasons, I guess, to take a 30, 40% haircut. But for instance, as a fiduciary, I can't do that. I'm not like allowed to do that. I'm a fiduciary. I cannot do that. So, food for thought. Um, but sure as hell, considering it's what the position is worth, not printing what I would like to print. I'm not in control of that. Arrow, Velo, Super Swap, great, claiming yield across all the L2s is so much easier now, right? Not having to deal with the breaks. Massive difference. I know you don't get spooked, but how concerned are you with engineered black swans to fuck up credit expansion? What, to cause deflation? To collapse the economy? There's nothing, you're not in control over it. An engineered black swan. But serenity tells us you have the mental capacity to deal with the things you're in control over and not worry about the things you have no control over. And being smart enough to know the difference. Because if you could tell the difference between some shit you could do something about and some other shit you can't do a damn thing about, you're going to be filled with less anxiety. I have control only over three things: owning more assets, knowing not to buy them at a premium, and making sure the shit that I buy pays me. That's all I'm in control over. And as long as I stick to those rules, I will be happy and accomplished and successful over the next 10 years. If I followed these rules earlier, I really started maybe mid 30s. Man, I wasted so much time. And then you could scream at a 20-year-old, don't waste the time I wasted. But they won't listen. They won't listen. They'll never listen. We've talked about those points. I wish I started earlier, is what it is. Hey, Cap, would you like my take on Athena? Uh, I have no interest in it. I just don't care. It's just not relevant to anything. How much does it cost and how much is it paying? It's not relevant. I don't LP. Every time I get tempted to LP, it's like 30% yield or something. I just don't have enough capital. So I'm just not taking the LP exposure risk. Maybe the equation changes with yield basis. So that's interesting. Just don't LP. Now, obviously, if you have like seven figures, if you have a mil in USDC and there's like a 20% LP on USDC, USDT, it would be a fiduciary irresponsibility to not LP because that's like 200 grand a year just on stablecoins. So I'm not in a position to make those kinds of choices. That's not what I have. So at this point, my cost benefit analysis, I don't LP. Um, so it's not like I want literally the stable coins in my control. That's savings of sorts. It's cash position. And I can't risk exposure. And so maybe when in the future, like you're sitting on 5, 10x, weekly cash flows from that, and you just have this huge amount of accumulated capital, you just throw it in LP and all right, great. It's a huge amount of capital, but you also have a huge amount of cash flow. So like the equation could get quite weird. and that's something to be considerate of. Um, as the equation changes, your perspective and your tolerances and everything's going to adjust. Listen, it's very hard to think these things in advance. It's hard to be like, how am I going to manage $100,000 portfolio if you just invested $500 into Bitcoin? You're not going to really think about it. The larger your capital gets, like, how do I manage $1 million portfolio if I have $100,000 worth of capital investments? All right, fine. Maybe you could start getting a little bit of a perspective of how you're going to engage. Now the numbers, maybe it gets a little easier as the number goes up. Like if you have a seven-figure portfolio, how do you manage an eight-figure portfolio? All right, you probably have decent experience with some of the things you'll encounter at eight figures that'll be very comparable at seven. It's a reasonable statement. The starkest difference, the biggest difference is with the low capitalizations versus the moderate capitalizations. Um, it's like what Charlie Munger used to say: the hardest thing in the world is to get to that first 100 grand, and nowadays that's changed. And that's what he used to say. May he rest in peace, Charlie. Charlie Munger's probably his threshold, that 100K threshold. I don't know, quarter mil. The hardest thing in the world is to get to that first quarter mil, and then I don't know. I don't know what the thresholds are. And in the end, everyone's thresholds will be different. How people engage is dependent on their personality. And frankly, how people manage capital is so much dependent on their emotional well being, how balanced you are, stable. This is why health and wellness are so important in capital management. Isn't that a weird thing? I mean, how many traders were social media folks talk about health and wellness? Isn't that such a critical component of managing capital? You need to not have anxiety. You need to not really, you need to be in control of your emotions, which I tell people sit in the sauna. And if you're feeling stress or got butterflies in your stomach, like that's something to fix. That's something to cure. That's something you got to work on. And that's by reprogramming, but that's also doing proactive physical activities like sauna and cardio and folks on social media call it touching grass, but it's really more than that. It's proper diet and nutrition. So important. You would not manage capital well if you have a lot of anxiety. And what's the point of having capital if you don't take care of yourself? Uh, well, that's just another very important thing to think about. Hmm. Things that make you go, hmm. Anywho, soon, much a pleasure, much a pleasure. Anything else that's interesting? I mean, this has got to be the biggest piece of shit I've. What kind? It was all just dumped on KOLs. This thing, you had folks with like seven, eight figures worth of like Curve and Velodrome, Aerodrome, or whoever the hell they were snapshotting, and they gave them nothing. Yeah, if you had like seven plus figures of Curve, they literally gave folks like $1,000, $1,500 worth of black. Like, what's the point? The whole point of such an airdrop is that you have aligned people. Because when you have aligned people, they're vocal, they'll talk on social media, say positive things, and that promotes the brand. Man, now I don't know what they did. They literally just did what they always do, like how pump dot fun turned into dump dot fun. The dump token, how it's lower than ICO. It's just extracting value. It's just capital extraction. Then all the KOLs are like, buy black. And then you look at the charts and they're like, oh, there's a tremendous amount of TVL. And then you go on to the vote page and you're like, let me sort by fees. And, you know, a couple of them are decent. Actually, it's a fair amount of fees this week. All right, 23, 108%. All right, maybe it will be worthwhile to vote next week. I mean, last week was horrible in fees. It's like two pools with $20,000 in fees. Okay, now these are, oh, that's not really that much. Let's see. That's a useless perspective. Let's do fees, 47%, because the 5% is worthless. Like, if you have like 3 grand worth of stuff and you're voting on something with 5%, like you're not going to do that. Um, but 46% at 32K in fees, okay. 44%, 30K in fees, you're not going to get diluted. Okay, 5K in fees, 140%. I mean, this is literally just meme coin shit though, because you the second you get it, you got to dump this stuff. That's cool. 5 grand in fees, 25%. Stable coins. Okay, that's interesting. So that's Bitcoin, 78%. Okay, fine. We'll see how it does versus Faro. Is Faro V3 yet? Is this V3? I don't think it's V3. No, because V3 is the X33 design of Shadow, which is what EtherX is going to be and what they'll do on for the Ramses deploy on Hype. Okay, 50 mil. I mean, Shadow Black definitely has overtaken market cap and TVL tremendously. I don't know, whatever. I'm not in my sentiment is I couldn't I can't warrant a significant exposure to Avalanche. Like, what was the best exposure for a while was Trader Joe, which became LFJ. And then I never had the Faro exposure. Faro did well for a while, repriced off the bottom, market cap 10 mil. That was significantly lower. I don't have meaningful exposure to Avalanche. I don't know. I mean, look at what happened on Linnea with Nile versus whatever the hell the other one's called. It seems like Kingdom was chosen. Let's see what the Avalanche Foundation. Do they choose someone? I don't know. Because consensus clearly chose Kingdom. Um, I don't know. Not spending any more money. Rule number two: firmly engaged. I mean, how could we not have like rule number two: firmly engaged? We're 5x off the bottom for things like Curve. 5x. I mean, folks got to really understand to a degree how late they are. 460%, almost 500% off bottom. This thing was close. This thing is close. So it just needs to get above that 50 SMA on the weekly, on the daily. This is a nice level. She can drop down a little bit. Why was it higher? Oh, it's higher to coincide with the levels back here in March of 22. I mean, we're nicely above that level, though. Look at that. That's cool. So the last time we had a breach above the 86-cent line in December of 24 was invalidated in about a month. So this is a nice level. See? Invalidated, invalidated, invalidated. And now we're invalidated. But what's the difference between this breach of 86 cents and the last one? Two, three. We're above the 200 and the 100 SMA. We're about to have a 100 SMA, 200 SMA bullish cross. And we're finally in 50 yet again from the downside, and we haven't punched it from the upside. So back here in September 22, March of 23, and March of 24, and then December of 24, we were nowhere close to breaching a weekly MA from the downside through to the upside. But now we came close, obviously, in December of 24, but now we may do it. So now, so you've had daily confluence for quite some time with these breaches of this levels being more meaningful than MAs, but now we're finally starting speculatively on the line to getting weekly confluence. So if you combine daily confluence and weekly confluence, you get more confluence. And monthly, we're above the 10. So we have daily confluence and monthly confluence because we reached the 10 SMA in the monthly back in December, but we didn't hold it. Now we're meaningfully above the 10 SMA, which is all the way down at 72 cents. You need 25 25 plus percent decline to get down to that MA, and you may close above it, and that's in little over 6 days. Things look to be in a good position, in my opinion. Anywho, last chance. If you're on X or on YouTube, I'm happy to answer any questions. Otherwise, we'll wrap up the call in a couple minutes. Post your questions in the chat, and we'll see how the rest of the month turns out. We got a couple of days next week in July, but these are interesting conditions. Arrow 85, let's see, we'll close above the 80-cent line. I like that 80-cent line. That's a nice line. I really want to see, obviously, a close above an MA. So you got the 10 SMA right there, which was, we're trying to punch it to the upside. And the last time we touched it was 7 months ago in January of 25. If you go to the daily, anything interesting? Looks like we're rejected from the 100 SMA unless we have a nice rip to the upside. Be nice to see back to $1 and a close above the 100 SMA in the daily, because that would imply it was a retest from the upside, starting to build some confluence because he did have a breach back here in June, and now we had a breach and a retest. And once there you're trying back to bullish confluence always is the breach to the upside, the retest, and then the higher high. So that's a component of confluence. I could print, may not. Dominance still falling. A much better interaction from the downside on the 50 SMA on the daily for BTC.D. You know, let's looking at something like this interaction here, the first interaction from the downside. This is more of a clean getting stopped out on the MA versus a breach and a wick through the MA, which had follow through afterwards. You start to get below that 100 SMA on the daily, and now you have more constructive potential for continued downside weekly. Got to get below that 10 SMA on the weekly. Well, 2 days, 8 hours for the weekly close. And that would be quite comforting if we see a push down to like 61 or down just below 61 in the 60s. And then you need further continuation to the downside in the coming weeks. All these things take time to play out, especially when you're looking at weekly candles. Weekly candles are things that most people don't look at. They take forever. At least folks think they take forever. Time is a funny thing. Ladies and gentlemen, Friday, July 25th, 12:25 p.m. Thank you all for joining me. 169 people made it to the end of the stream, and you are all now that much rational because of it. Stay calm, cool, collected over the weekend. I wish you all a good one, and I'll see you guys and gals next week. Until then, peace.